bringing in Michael Hewson over in the UK. Obviously, the markets over there have been a bit muted, Michael, over the last couple of days after the passing of Queen Elizabeth II.
Yeah, a little bit. I think most of the reaction, has been probably a spillover from last week's energy bill that was passed by the UK government, the essentially capping energy costs for the next 2 years for consumers. There's also a business bailout as well, which lasts around about 6 months. And as a consequence of that, we've seen a fairly decent rebound in some of the more retail-focused stocks here in the UK. FTSE 100 managed to rebound modestly from the losses of the last 2 weeks. But you are right. I think sentiment is probably a little bit more subdued than perhaps it would be under normal circumstances.
And the Bank of England, it delayed its cash rate decision by a week as well. What impact is that delay having at all on the markets?
I really don't think that it has that much of a delay. Essentially, interest rate decisions tend to be very much those sorts of decisions that have a long effect, or a long tail effect, or a long lead effect. So I think whether they raise rates this week or whether they raise rates next week, it's neither here nor there. I think the only debate really is around about whether they raise rates by 50 basis points or 75 basis points. I think one of the things about last week's energy price package is that actually could lower the headline rate over the course of the next 6 to 12 months. You may recall that Goldman Sachs suggested that it might be at 22% by the beginning of next year. That was never really credible. I think it was more headline grabbing than anything else. But I think what it has done is it's made the Bank of England's job that much easier over the course of the next 6 to 12 months, in that they can probably be slightly more gradualist when they raise interest rates. We still think that they're probably going to go another 1 to 1.5% by the end of this year, taking the headline rate to around about 3%.
Yeah, they obviously need to keep lifting rates pretty aggressively to bring down inflation, which is expected to could hit double digits in the UK. What's your reading on where inflation is going right now?
Well, I think we are expecting the numbers out tomorrow. 10.1% were the numbers in July. I think without this bailout package, we could well have seen 13% by October. That was certainly the Bank of England's target rate when they last published their forecasts. I think we're unlikely to see that. I think it'll be a win if we don't go much higher than where we are now. I think we could well have seen the peak. We've certainly seen it in the US. They've got numbers out later today, and that number is expected to decline to 8%. And we are starting to see natural gas prices come down in Europe as well. So I think as long as natural gas prices remain subdued and economic activity remains fairly flat, because I think it's unlikely to pick up significantly because of the cost of living crisis, then I think we are close. We are close to peak inflation, but certainly shop price inflation has been trending at around about 10.5%.
Yeah, well, as those gas prices have started to come down, it seems like European markets are rebounding a bit. Is there a bit of a sense of relief over there at the moment?
There is a little bit, absolutely. I mean, I think most consumers were very, very concerned about the cost of energy. We had a 54% rise in energy prices in April. We were looking at another 80% in October. And when you consider that the typical bill at the end of last year was around about £1,800 a year and was projected to be over £5,000 at the beginning of next year, I think there is some relief. There's certainly challenges. Wage growth is trending at half the rate of inflation at around about 5.2 to 5.4%. And obviously has been industrial unrest as workers have gone on strike for higher pay. Now, those strikes have been postponed, but I think that's probably a problem deferred more than anything else.
And we saw the UK economy numbers grew slightly more slowly than expected in July, but it seems like consumers still keep spending that money in retail stores. You touched on this a minute ago, but is the outlook for the retail sector still pretty good?
I wouldn't use that adjective. I'd say it's probably more certain than it was this time last week. But I think energy costs is still a big problem for the retail sector, as is business rates. There needs to be significant reform of box retailers or retailers with actual premises, because they pay inordinately higher rates of tax than online retailers. So consequently, I think this new government really needs to look at the way businesses are taxed going forward, because they pay a much higher rate of taxation than online retailers. And that's something that this government and previous governments have really sort of not tackled, and it's something that they really need to do over the course of the next 2 years.
Oh, well, Michael, thanks so much for your time today. It's great to talk to you. And obviously those US inflation numbers, they'll come out later tonight and we'll be previewing them on the show tomorrow. So Michael, Chief Market Analyst at CMC Markets, thanks for your time.